continuing with the program, global economies are facing the most challenging times ever. Turmoil caused by the war in Ukraine, the soaring prices of gas and fertilizer, and disrupted logistics are part of the aftermath of the COVID-19 pandemic. However, we have seen coffee business soar and reinvent themselves amid these challenging circumstances. We're thrilled to welcome with the analysis Carlos Mera, Head of Agri-Commodity and Market Research in Rabobank, London. Welcome, Carlos.
Well, hi everyone. I'm delighted to be here. I almost don't make it this year. My flight was perfect, but the immigration officer didn't believe me when I told her that I was coming here for work at Mario's Los Sueños. I don't know why. But yeah, I'll present today my views on supply and demand. And the title of my presentation is Big Bear Meets Big Bull. And this because I think at the moment we have two stories, one that is very bullish and another that is very bearish, that coexist. And sometimes one dominates, sometimes it's the other that dominates. I will probably dramatize these stories. If you think I got different personalities, well, this on purpose, at least this time. So let's start with a bullish story. And that has all to do with the drop in production we've seen in Brazil and other countries, but Brazil in particular. So Brazil had a record crop in 2021, and let me focus on Arabicas because Robustas is not such a big deficit. So we had 53 million bags of Arabica production in Brazil. That was a total record, unexpected. We had to increase our estimates, and everyone had to increase their estimates for that crop. Then in 2022, we had a year of dryness, and production dropped to 36 million bags in my estimates. I will talk about market estimates in a second. And then in the last harvest, 22-23, we saw a little bit of a recovery to 40 million bags of Arabica. So these are my estimates. Certainly a big drop from that record level. Maybe market average is about 2, maybe 3 million bags lower on each year. But we perform a stock survey for the 21-22 crop. And the results were that actually stocks with exporters drop a lot, more than 30%. And that was expected. But stocks with other players and farms in particular didn't drop as much. So therefore, I still keep numbers a little bit above the average in the market. But still, even with these numbers, 10 million bag drop, and 20 million bags 1 year, and then 13 million bags in the last harvest, still below the record, this is very bullish. 2 consecutive years of very limited production out of Brazil. If we move to other countries, Colombia, the crop in Colombia for the last season was disappointingly low as well. And that crop estimate required being trimmed more and more, and now it's below 12 million bags. Maybe in the coming season, we'll see a little bit of a recovery. It's hard to say, but this is still very wet in Colombia. We had excess rainfall for a long, long time. It's like Macondo, if you read Cien Años de Soledad. So not much relief still. Production is still very limited. And of course, consumption over the long term grows. So it's quite worrying to see production not increasing. Central America is still very limited in the last season. This coming season, I will expect a little bit of a recovery. I will expect the recovery in Central America to be stronger than the one we expect in Colombia, but still well below previous record levels. Now, in Colombia, we saw a weakening of differentials recently, and that didn't have to do with increased production. It had a lot to do with the weakening of the currency. Production is still very disappointing. Moving on to Vietnam, and in Vietnam, we had a good crop in the last harvest. This coming one, I think, is going to be a little bit lower. But still, looking at the biggest Robusta producer, we don't see much growth. And in Vietnam, trees are getting very old, and they need renovation. And during the pandemic, it was probably not possible to do this renovation. It was difficult to get people on the fields. There was difficulty of movements in Vietnam. So maybe there will be a little bit more renovation in the future that will allow some increase in production. But one thing we know is that area is limited. The Vietnamese government doesn't have an interest in expanding area for coffee. So a little bit concerning, right? This is all very bullish. This all sounds very, very bullish. And this tightness in Arabica, and I'm going to focus on Arabicas now, has resulted in a drop in certified stocks, so that we are now at the lowest level in more than 20 years. We saw quite a bit of regradings recently, so it's not as low maybe as when I finished this diagram, but it's still very, very low levels. And just to be clear, these are certified stocks that are certified by the exchange and that they can be used to settle a financial futures contract. So if we don't have certified stocks, somebody takes a long position into delivery, there might not be coffee around to settle those futures. This is potentially very, very bullish. And we saw the curve inverted. I wouldn't expect any big replenishment of these stocks until maybe Q4 2023, so we might see a lot of strength at the front of the curve until then. Also very bullish. However, I did a little bit of a simple exercise. I tried to make it as simple as possible. I regress changes in prices versus changes in certified stocks on a weekly basis. And before doing that, my expectation was that, yes, this simple model was going to explain something like 5% of price changes. But actually, when I did the calculation, changes in certified stocks were only explaining 1% of changes in price over a long period of time, since 2010. So if you follow the market, earlier this year, we saw price changing 5%, 4, 6, 7%, based on the certified stock situation. So you could say that the market has been a little bit obsessed with the decline in certified stocks. A lot of caveats with these exercises. But just to give you a measure that the drop in certified stocks is probably not everything. I'm turning bearish now. And for the bulls, I don't know whether I convinced you to be bullish, but the bulls have been getting fed recently. Good luck with the translator with that. So we have inflation in the world. We saw two-digit inflation. I think we are past peak inflation. We had a release in the US, 7.something%. So it's coming down slowly, but it's coming down. But yeah, central banks will still hike interest rates to bring it further down. And this can cause crisis in some countries, recession, and many problems associated with crisis, increasing populism, et cetera, et cetera. But one direct effect of a global crisis and increasing the interest rates in the US is that attracts a lot of money to the US as a safe haven and because it's rewarding capital. This is the dollar index, the diagram on the right. The dollar index is basically the dollar measured in currencies of other developed markets, like the euro, like the yen, etc. And this basically is telling us that the euro and the yen and some other developed market currencies are losing power against the dollar, meaning that in those markets, coffee is relatively more expensive. So, yeah, coffee has been dropping in price, in dollar price, but measuring euros or in Japanese yen, maybe not so much. And inflation is very close to me, basically because I'm from Argentina. I was born in 1980. I saw hyperinflation. Probably not many of you saw it. I remember my dad and my mom will come very late, twice a month. So they will get paid in cash. At the time, it was a lot. They had a big bag. And they will go to the bank, deposit it to protect it against inflation. And the rest, they will go to the grocery store and buy groceries, because next week it was going to be 20% more expensive. But inflation normally correlates with a drop in real incomes. And this diagram shows it. This is basically US wage growth minus CPI, minus inflation. So we had a drop in real income in the US. US wages are very good for people that move jobs. Employers need to pay a lot to attract new labor. But for the average worker, wages have been going down. And this is similar in Europe and many other countries. But in the EU, it's even worse. So let me show you here the EU consumer confidence. So the consumer confidence in the EU is lower now than what it was at the peak of the pandemic. And that was shocking for me to see that. I was expecting something getting close, maybe, but it's now actually worse. And that has a lot to do with the energy crisis as well, right? We are going into the winter without being able to import big volumes from Russia. Normally, the EU imports 1/3 of the natural gas needs from Russia, and that's not possible anymore. So quite concerning there. And you can see also the correlation there with the retail sales. And then we have funds, and funds have been selling agricultural commodity futures, especially in the last year. I will not go in the last few weeks, but certainly in the last year, with the recession expectations going up, there was a need for a lot of money trying to profit from the expectation of a recession. I mean, this is what funds do. So there was a need sort of to trade that recession in the market. So they were willing to basically sell everything that will do badly in a recession. Coffee is being seen as having some sort of correlation. Coffee demand has some sort of correlation to GDP, and therefore funds were getting also very short in coffee. And this slide doesn't have the latest figure, which is minus 14,000 lots, the orange line. So they got even shorter in the last available week. And then there are pockets of weakness in the world. So this is China. We have an analyst in China, and they've been telling us that, well, actually we expect a drop in food service sales and a drop in specialist coffee shop sales, 5%, 7% and 5% respectively. Now, I'm not sure we can say China total coffee demand is dropping in 2022, but certainly it's not growing like about 15%. That was the rate of growth before the pandemic. So there might be a sort of compensation with higher at-home consumption or deliveries, though that shift of demand is probably not as perfect in China as it was during the pandemic in Germany or other mature markets. And it gets worse. So I talk about the drop in incomes, I talk about the hiking of interest rates, about fund selling, I talk about the collapse of consumer confidence. But I'm going to do some estimates right now about demand, but let me show you this, because I want to qualify any estimates. So this diagram shows food prices and terrorist attacks, mortalities from terrorists. And you can see this normally about 3-4 year delay. So when food prices peak, 3 or 4 years later, we have an increase in terrorist attacks. The French Revolution was preceded by very, very high bread prices. And the weather was also very bad before the French Revolution. The Arab Spring, again, very high bread prices in Northern Africa, and also energy at the time. That was in 2012, but it took a few years, and that evolved, can I say evolved, or that led to the rise of ISIS a few years later. So very concerning. We might see some more failed states around the world, and it's very hard to predict demand under those conditions. But having said that, in principle, I will expect demand to still grow. I think demand is still growing, but at only like 1.5% approx per year. If I had been here in January talking to you, I would have said I expect demand to grow at 3% or 3.5% post-COVID, as we were expecting a big COVID rebound. But that now is facing a cost of living crisis. And this is also exemplified here. This is basically net imports in non-producing countries on an annual basis. So we saw a big dip during COVID and then a bit of a rebound. But basically, by the end of June 2022, on a 12-month basis, demand went to what it was before the pandemic. Maybe now it's a little bit better. We need to wait for more trade data to come in. But it's not, it's doing well, but it's not doing that great, and that's bearish. And now probably the most bearish argument of all, container prices. So container prices were rising a lot, and they peaked in September 2021. And at that time, we were estimating that 10 million bags more of coffee were needed in the world just because of the delays and the bottlenecks in the supply chain. So that has improved massively. So container prices are down 70% since the peak. And also we saw some shipments in bulk that also helped the situation. And some routes are much improved. Atlantic routes, especially like around South America, not so much. But certainly most shipping routes are working much, much better. So I don't have an estimate for this at the moment, but certainly we need way less coffee to face these bottlenecks and these logistical challenges. So this is also very bearish. And when we talk about production going forward, I mentioned this coming season in Central America, I expect a little bit more coffee. Colombia maybe also a little bit more. I haven't mentioned Brazil next year on purpose so far. So when I was there in February, I took these pictures. And you can see that branches in February were really long, and that's potential for next year's crop. But there was a little bit of disparity. So many trees will be producing very, very well next year, but some trees will need a little bit more time to recover, especially those on your right, on top right. Those trees, and there was quite a good proportion, and as well there was a small proportion of trees that had to be replanted, or they were pruned in an aggressive way, and those might not be productive next season. So I won't give an estimate for next year's Brazil crop, but we don't think it's going to be a record crop. We don't think it's going to be 53 million bags of Arabica, but we do think it's going to be a significant improvement on last year's. And also La Niña. La Niña has been affecting the global weather for the last 2 years. And we are going to a third La Niña event. I normally count La Niñas at the end of the year, at the turn of the year. And it's a risk. I mean, it's associated with increased rainfall in Colombia. It's associated with dryness in Brazil. And it's active at the moment. And it's expected to be active until about March. However, it's expected to go away. So yes, it is a risk, but it's a waning risk in the market. So let's wait and see a little bit more, but certainly it's not a major concern. And yeah, it's raining in Colombia, but at the moment, Brazil weather has been very, very good. So Brazil had a very, very good flowering, widespread flowering, and also it rained consistently after the flowering. So now there's a lot of pinheads appearing. Again, I think it's going to be very good, but not a record crop. So putting everything together, this is my supply demand. I think we had a very large surplus of coffee in 2021, of Arabica mainly. But that surplus was not influencing the market because much of that was absorbed by the logistical bottlenecks and challenges in the container shipping trade. It's now being unwinded. That coffee now is being released to the market slowly. 21-22, a deficit. 22-23, a little bit of a deficit, but very neutral. 23-24, I will expect a fairly significant surplus. Nothing like 2021, but something like 3, 4, 5 million bags of surplus. I think that expectation has now been catching a lot of attention, and that's one of the main reasons why the market has been coming off. I forgot to mention one bearish point here, that is that the dollar strength also created a lot of depreciation in many other currencies. So I mentioned the Japanese yen, I mentioned the euro. So for those buyers, coffee is not so cheap. But also the strength in the dollar created depreciation in the Colombian peso, in the Indonesian rupee, even in the Vietnamese dong depreciated. Not much, but we were used to it being totally stable against the dollar, and now we see a little bit of weakness incentivizing farmer selling in a number of countries, and the Colombian peso being the one that depreciated the most by far. Very, very happy to answer any questions. That was all the content I have for you. I am forced to show you this slide, which is from my compliance department, but you'll be totally glad that I don't need to read it to you. But yeah, maybe, I don't know, any questions, comments, disagreements, feedback? Anyone? Not all at the same time? No? Last chance. Okay. Well, thank you very much.